Hi, ladies and gentlemen. Today is the 28th of Feb. It is the last trading day of the Feb series. It has been a very interesting series all over the place. We started off with the budget volatility, and then you had the entire Russia Ukraine escalation, and now we're looking at nuclear threats being made. So, definitely, very uncertain situation for the world and not just the markets. And right now, my idea is with trading as well that I will try to reduce my exposure as many days as possible as long as this uncertainty remains. The thing is, it's like a coin toss, and trades can go really well, or they can also stop you out very quickly. Since I'm an intraday trader, I don't really have risk of gap. I don't have risk of any of that, so I can always take. But it's very possible that you get stopped out very quickly when the volatility remains high, as we saw on Friday, where the entire day basically after the first 30 minutes, there was really no fall off in premium. So for my trading style, I would prefer if I remove the outliers, remove the really good outliers, remove the really bad outliers, and try to stay in between. So most of the time, whenever things get uncertain, my entire logic becomes okay, avoid taking a trade as much as possible. Today also the idea was maybe if there's a quick IV crush after the gap down, I can benefit from that. It didn't come in, my idea was 2 point stop loss, so it didn't come in time. So I just took the exit. From where I exited, this position is already made 3 points of profit, but it really doesn't matter because if you don't take the risk, psychologically you have to program yourself that you cannot expect the reward. You didn't take a certain risk. Yeah, I mean, puts are way inflated, but there's a good chance that they carry that over into the next day. And also, when you have a situation where we have a holiday in between the week during a global uncertainty, anything can really happen, and there can be a huge gap on the upside or downside on Monday. So, basis that, option premiums might really not fall off too much. So anyway, that's about that for now. This period is going to be a very lean period with very little exposure, and just waiting it out. You have to wait for a situation where you are placed in a good position to take advantage of your trading system or trading style, whatever that edge is. All periods will not be good. So I mean, and some periods will just be random. They can go really well or really badly. So I'm not particularly comfortable with that. I'm just going to go over quickly what this month has been like. Okay, so this month, as per this, it will show I have 3 losing days. Actually, there are 2 losing days because this particular day was just an adjustment made to the TCS trade that I had. TCS trade gave me all put together about 2 lakhs loss. If it worked out, it would have made around 5.5 lakhs plus profit. So that's fair enough. I ended up taking a stop loss at around negative 2 lakhs. But apart from that, the other 2 losing days is this was on Friday. Friday, the thing is, I made an execution blunder, completely my fault. Put myself in 4.5 negative in the first 20 seconds of the market. That was really, I mean, that is just a massive oversight. But even then, the loss really curtailed to 1.7. And this particular day, on the 16th, this was the day where we made that massive up move. And call options, the call option that was trading at 15 rupees went to 150 plus. So this was that massive up move day. There was really not too much I could do here as well. Took a stop loss well within time, and in all 3 days kept that stop loss in check. So that was a good outcome. And also in this period, there will be people who are taking overnight trades now, especially with loose hedging. Their outcomes will be either really, really good or really, really bad, one of the two. And one of the examples of the days which is really bad was this particular day. So on this day also, on the TCS trade, I bought 1.6 something, so as a negative. So between these two, 2.4 or something is what is the negative booked on TCS. And go over the charges. Yeah. So anyway, the idea is lean period, really contain your risks. A lot of people, what they do, and this is generally how behavior works in any event, right? Any big event, first there's an initial IV spike. Some people think that is an opportunity. They go short, like let's say you have India VIX rising to 30, and they say this is really good. We're going to short. We're going to take short volatility trades and longer dated expiries, so on and so forth. And then, sometimes what happens, they get a little bit of respite also. You have a little bit of cooling off. But just imagine if there is, for example, and I'm not any expert in geopolitical affairs or war here, but if there is the use of a nuke, I mean, there's talk right now, and that's what is freaking out. And right now, you see India VIX going back up, it's still under 30. If there is even use of one tactical nuke anywhere, that is going to change the plane. That's going to hit circuits. Markets are going to hit circuits. The probability of that happening is really relatively low, one can say, and most of this is just going to be empty talk. But there is a risk. Now, if you are voluntarily exposing yourself at a time of risk, and I mean, obviously, intraday you can contain the risk, you can take a stop loss, but even then, the randomness in the market you can't get rid of. So, I would suggest really don't try to play with fire. The people who try to initially short volatility, it's when they start covering that you really see the second spike, which whenever you see VIX go above 50, 60, 70, that's because there were guys who shorted it at 30, and then they are getting margin calls, they are getting pushed out of their position and have to cover. So anyway, that is as far as this is the realized P&L. This is the charges. We'll go over the charges. Yeah, so as always, majority, I mean, charges actually as a ratio this time is quite all right. And yeah, these are the charges for people who generally ask about what is the charges for this. So that's about it. It has been all said and done a good Feb month, and I think I've done well in order to. Then the reason it has been good is because I always cut the losses in time, because on any particular day, right? I mean, even this day, if I hadn't booked a loss, here at 2 lakhs, this would have ballooned into 10 lakhs plus of a loss. If I hadn't booked the loss here, I would have actually made a little bit, but that's fine. And yeah, TCS trade, if I hadn't booked at around 2 lakhs negative at one point, that trade would have also given me 3 lakhs negative. So it's all about, and even this expiry was relatively tricky. It could have gone either way depending on what happened in the second half. If I had taken additional risk, I might have given it up. So right now I'm keeping my risk appetite low, keeping my targets low, trying to stay lean. In whenever there's all kinds of uncertainty in the market, you want to try and stay lean. You don't want to sort of overexpose yourself. There will be times where you can take better risk, higher risk trades. Like just for example, on this expiry, my ending position was 700 points wide. It's not very often that you see that in the last 30 minutes of trading, my position is 700 points wide. That too, it's got like some 75 paisa left, and I'm keeping it open because why close it? Because I've kept stop losses, which at about 50 paisa will take me out. So it sounds stupid to people almost. It's like, okay, why are you still in the trade? Might as well square up. Putting a stop loss and leaving it, this time I'd actually put the stop loss in the system. It is the same thing. So yeah, thank you so much for watching. I hope you are staying safe in this period with your trades, and I wish you all the best for the next month, and take care. Bye bye.